Hello, everyone. Welcome to today's panel conversation. My name is Nicholas Belvin, the head of marketing at Fintech Cadence, and today we have the pleasure of having a wonderful panel here with us today to discuss the future of wealth management. So it's going to be a really interesting conversation. We're going to start by looking at what wealth looks like throughout Canada, looking back in the past and where it was at, and then looking forward to the future to see how technology and innovation can really help disrupt and change the wealth management industry. So I'd like to kick it off with you, Jonathan, to learn a bit about where we're at today in Canada. Is Canada wealthy?
Yeah, it's a great and good general question. The state of wealth today, and I think I'd love to be able to chip in with you guys on how it moved and evolved. But today, I think it is healthy. I think though there's big changes and systematic changes happening. Wealth management for many years used to be about returns and look at your portfolio of stocks or funds and ETFs, and which is all great. It's a core part of it. But I think more and more people are focusing about being able to answer the question, am I okay? And generally having a positive impact on people's lives and moving towards more of a wealth coaching approach to help people, be able to structure their finances together and personal finance and stuff. So that's taking a bigger toll than before. And I think it's a positive one because the biggest challenge Canadians face is not losing money, but it's not having enough.
Right.
And I think as an industry now, in the wealth space especially, we're really more in tune with that specific need for Canadians.
Okay. And when we look at the statistics today, like in Canada in 2018, $852 was the amount on average people had in their savings account. Why is it so little?
You want to take it?
Happy to join.
Yeah, please.
Philip Barr, I'm the founder and CEO of Mylo. Something we look at on a regular basis, similar to you, we saw in our surveys, 53% of Canadian millennials have less than $1,000 in their bank account. And it's not because they have a difficult time earning their money, but it's because they don't know where to start. There's so many options out there. They don't know how to price it. They don't know when the right time is. It's something that's on the bottom of their list, and it always gets deprioritized compared to just life events that happen every single day. If you take a look at the state of wealth today, I think we have three main segments in Canada. You have the first one where you have earners that also invest and save their money. You have earners who don't save and invest their money. And you have low earners and with no savings investments. I think the wealth industry up to today has been primarily focused on the first category, right? People who save and have assets and earn and have assets. I think the second and third are underserved in this country, and those are growing markets, the shift in generations and what's happening right there. These are not the ones that people are typically being addressed. So with Mylo, we're trying to do that with getting started with spare change and making it easily and accessible for people as part of our social mission of what we're trying to achieve to make that happen. So you're seeing more technology driving in that area, and I think that's why a majority of Canadian households have $852 of savings.
And was there a shift, like in the past, maybe you could speak on this, were Canadians better at investing and saving before? Or is it a generational shift with millennials that maybe feel comfortable and that, life in Canada is so great that we don't need to think about the future?
Well, I would say that depending on the type of clients, definitely there are some clients that are earners and are able to save and wants to save. I think the shift went a little bit more like in the returns, and as Jonathan mentioned previously, I think that one of the key focus is, am I okay? So making sure that the client have their life goal, and there are either a do-it-yourself investor that could use more of the technology to answer that question, or rely on advice that we are currently providing to more of our clients. So I think this is the shift, and also the shift is coming from not just looking at the investment, but more looking around financial planning, estate planning, and what's the best way to invest, but also what's the best way to look at the other side of the balance sheet where I need some financing. So I think the shift is coming, and it will go more and more around wealth management as a whole picture, not just investing.
Yeah, just to complement what Seb just said, I think naturally to answer your question, there's always inertia around money, no matter the generation. And I think people would tend to spend more time shopping for a new pet than actually looking at how they'll organize their personal finance. It goes in that category of stuff. I'd rather find the right place to buy a hamster than deal with my personal finance, which
like
is a
going
reality.
to the dentist. It's
And
not
I don't
something
think, I think for most generations, while there are differences between millennials, Gen Xers, and boomers, I think generally inertia around money management and personal finance has always been a challenge. And to your example, I think putting nudges and ways for people to simplify things that are not always fun to do is something that as an organization we're really looking forward to, because that's positive impact on people, and that helps folks do something that naturally they'll always have that inertia around it. And that's something we're embracing as a change, and we'd like to see more of.
And arguably, we could say today's easier than ever to invest because we have technology to help us do so, to give us that nudge. Prior to these new technologies, what was being done in the industry to help people invest?
Well, to help people invest, you would rely on advice. You would go into a bank and you would want to deposit some money, and the teller would, if you were lucky enough, the teller would tell you, well, have you thought about investing in this and that? You seem to have a nice balance now. How about doing this and that? So we would try to catch people like that, right? But today, it's all about trying to democratize these kind of services and making them available on a larger scale, making the technology that helps human intervention to become more relevant and personalized. So we need to take this chance of encounter and of advice and replace this with a systematic approach, data-driven approaches, technology-driven approaches that are enabling us to really make a positive impact on a larger scale.
Maybe I can add to this. So Dominic, Chief of Staff over at Flinks, financial data aggregator. So we power a bunch of alternative financial service providers. So to me, you just mentioned the keyword, which is democratize. Yeah. So to me, that's the huge hidden power of wealth tech. Because so both you guys have touched upon this. Wealth management is a very sophisticated discipline, right? Regroups a bunch of different services, investment, financial planning. There's some tax, real estate, legal aspects to it, bunch of things. So traditionally reserved for high net worth individuals, right? For whom it's worth actually using this sophisticated service. Now, with wealth tech, what's happening is, leveraging the power of big data and, the improvements on AI we're seeing today, we're able to provide, not the holistic wealth management services, but some key pieces of wealth management like investing, financial planning, budgeting, and so forth, to Mr. and Mrs. everybody, because the cost is so much lower, and we can automate a more tailored experience. And a very concrete example of this, like sitting around this panel right now, is so we, Flinks, allow a consumer to share their financial data with Mylo, who then will guide them towards reaching their saving goals. And all of this for, what does it feel like, $1 a month or $3 for the premium service? Exactly. So, right? So, allowing Mr. and Mrs. everyone to save towards a goal. So once again, it's not the holistic wealth management, but it's key pieces of it. So saving, investing, available in a do-it-yourself manner from your smartphone. And this is from a personal consumer individual standpoint, but it's the beauty of it is it's also leveraged in the professional services. So when you're going to see a portfolio manager or a financial advisor today, they also leverage wealth tech. Like your portfolio manager will use robo-advisors, just like you could use yourself on your phone. So there is still room for the in-person tailored approach, just as there is room for applications, and they both leverage the tech we have today.
I really have to take this again. So you mentioned that there's still room. Not only is there still room for human intervention, but it is a crucial centerpiece of the wealth management strategy and need for everybody. So wherever you ask around, you still, in all the sondage, in all the surveys, the importance of the human intervention is still extremely important. So our goal is to make sure that we can intervene in an efficient manner and scale and make our intervention more effective. So technology is not only there to replace human, actually it's more there to augment the value of the human intervention.
Could you build on to that to say like where we're at right now in terms of how that evolved? Because before you had to physically go to the bank and have that physical interaction, where we're at today, and then maybe, Phil, you could chat about where you think that that's going in the future.
Maybe just to go back to what you're talking about, how did we get here? I talked about the three different buckets: high earners and high savers, high earners, no savers, and low earners, no savers. I think 50 years ago, the first and second bucket were one and the same. I think we had more people saving and investing their money because they had more interactions with branches, and the way they consumed was more in line with the way that they wanted to consume back then. I think there was more defined company-driven initiatives, so your company was helping you go through there. I think there were pensions that were put into place as well. I think with the shift of moving away from defined contribution programs to where we're at today, I think that was a major part of creating that second bucket of earners, but not saving, because it turned into analysis paralysis. I also personally my experience in wealth has been the post-iPhone experience, and I think, and this is my personal hypothesis, but that wealth has actually changed significantly. All financial services have changed significantly since the launch of the iPhone. It was back at the same time that Steve Jobs launched the iPhone. It was the same time that we were going through the financial crisis. So banks stopped innovating because they were dealing with regulatory pressures and compliance issues and things that they wanted to do. At the same time that the consumers were shifting the way, they weren't only going from brick and mortar to e-commerce, but they're doing brick and mortar to e-commerce to mobile. So if you're now using your iPhone to book your travel, date, order a cab, you want to be able to do that with finance, and you're no longer going in and having access to that face-to-face, so it's no longer as top of mind for the everyday consumer. And I think that's what led to the big opportunity in fintech that we've seen in the last decade. I think that gap is closing in a bit, and I think we're seeing a lot more partnerships, which I'm sure we'll talk about in a few minutes. But I think that was the true opportunity. That's where it created the big divide, the big gap, why Canadians are in the position of not saving and investing nearly as much as they should be. And I think the key to being able to resolve that is getting rid of analysis paralysis and being able to provide easily accessible solutions for individuals.
Yeah, that makes a lot of sense, because before, when you were in the bank, you had that contact all the time, and hey, you should be saving more. Hey, I see your balance, and it's that physical person. And we're saying how now we're in person having this panel and having that human interaction, even just here versus being on TV with a microphone in your ear, changes that whole dynamic. Did you want to add on?
Yeah, well, just to answer your question on how we do it now, which is different than in the past, is that a client today at National could start from home, filling up some basic information on their goal-based planning, on some of their financial needs, and could then identify a need to talk to a human, an advisor in a branch, and say, hey, you know what, this is getting complex, I'm not sure, I'd like to have somebody come in and chip in. And this is where we really built it on the notion that it should be in the channel of the choice of the client. And then when you go into a branch, you're able to start at the same point as where you were doing at home. And the branch advisor is going to see the same thing as you see. And that's important because there's often the segmentation saying, oh, this is a fintech thing, so it's only online, and you figure it out. And so the angle we have on our side, and that's for the nature of the panel here, is to say, well, let's, to your point, let's augment or enhance this experience by saying, well, let's give it to both the client and the advisor is going to help you coach yourself to get there. And I think that behavioral coaching part is a key differentiating element for us. But the only way we could make it work is to make sure that the advisor has also the same technology stack information as the client has. So in that way, you're able to collaborate and to get to that personal nature of that relationship. Because at the end of the day, it's all built on trust. And that's the angle that both an organization like ours or an advisor brings to the table. And if you're having a life event, a lot of the time you don't want to deal with a sequence of algorithms or a 1-800 number to talk about your divorce. So that's where we need to have these advisors coming in and chip in to help an individual investor.
Yeah, absolutely.
Maybe I could add to your example, Jonathan. I think it's the same as going to the gym by yourself or going to the gym with a coach. So our vision is to have the coach as you mentioned, that will talk to the client, make sure that they're saving enough to achieve their life goals, retirement, or any other passion they have. So I think this is really the key differentiator we have, is to make sure that our advisor are personal and financial coach.
Yeah, definitely I need a coach on my side. I need a coach.
I might play devil's advocate here. I completely agree that the human component is core to what you need to do. One of Mylo's values is human first. We're a technology and AI company, but we think that in order to have a core company value, you need to be able to have that human first approach. But human first approach isn't always human contact in the way that we see today. And it's thinking about the user experience. And I'm going to challenge you that there may be a way to build a product experience that will allow you to automate a lot of what's looking for. So sometimes throwing people into the mix is a band-aid to a poor user experience or a poor flow, or there are problems that you can solve. It should be as simple as going through a 3-minute sign-up process without having to question, why am I asking this, or why is this complex? And I think the companies that are able to go and build that human-first technology approach, and it's a weird thing to say, human-first technology, but to be able to go and do that, are the companies that are going to be able to scale. The companies that will be always on demand, because you can't have a human on 24 hours a day. I know I run a business, and I try to scale myself 24 hours a day. It does not happen. So to be able to make that happen, I think is important.
Oh,
Two mics. All
Too
right.
much, sorry. I was going to build upon what you just said. That's why the key there is, when technology comes in, it needs to first get rid of all those tedious, repetitive, low-value activities. So that's whenever you want to innovate or you bring technology in the play field, it's to eliminate those, to free up people to do the more valuable intervention. And then in addition to that, you give the people the tools to augment the value of their interventions. And then the key is this perfect hybrid experience where you start off, yes, with maybe some automatic, with an app. There are some things that are too complex, you don't feel comfortable about them. You reach out to a human, and that gets, and all the information gets shared immediately, and then you close the feedback loop, and the app and the human work together to give you the best possible experience.
So I think the human adds, and you mentioned this before, the layer of trust, right? There's someone tangible, someone accountable that you can go and do. There could be a way, and I don't think there's any perfect recipe. There could be a way of doing a hybrid solution. There could be a way of building that trust through interactions within a platform. And again, maybe that human interaction is done through chat, right? Maybe it's done through video. Maybe it's done through another thing. So I think when we're seeing branch activity, and we're seeing probably, and you guys would know best, if branch activity is going down over the period of time, but there's a way to be able to complement that. And I think the hybrid approach is a great way of doing so.
So we spoke a lot about technology and how it's shifting. I just wanted to look back now at maybe the technological debt that financial institutions have, because you mentioned the rise of the iPhone, and we know very well that banks use legacy systems. They're extremely robust, extremely well built, but that could be difficult to manipulate in today's age. How is La Banque Nationale, working with their legacy systems and at the same time trying to integrate new technologies or collaborating with startups?
So you want to take it?
Yeah, okay, I'll take it. So yeah, definitely, and talking about legacy system, we do have a lot of IT architects that just got headaches because we're trying to fit in those technology. That being said, I think this is where the opportunity to work with fintechs, having a new mindset, having new technology, and this is the challenge for both organizations. So you have the fintech that have the innovation, the new technology in mind, and for us, the bank, we also have a large distribution, a brand. So I think working together, this is the opportunity for each of us to learn more about the different challenges, and this is where it brings a lot of value. So that being said, it's not always easy, because fintechs are nimble, they can move fast, banks move a little bit slower, but definitely with good partnership, this is where we definitely can create value for our customer and clients.
Sure. Yeah, I happen to lead AI and innovation for wealth management as a strategic point of view. So yes, I hear the pain in the question and I feel it. This being said, at the bank, we have decided to strategically position a group of people whose mindset is geared towards innovation. Specifically, and within that group, it's not only AI and blockchain, but it's also venture capital. It is focused on fintechs as well. So this whole group's mindset is all about finding opportunities to just come up with some, game-changing ideas, and where they might be, well, we're open to all of these opportunities.
So then do you think the future of wealth tech or wealth management in general is going to come from inside a bank, from outside the bank, or a combination of both?
Yeah, so that's a good question. A few years back, we decided to be an open architecture in our asset management world. So I run the asset management space at National, and we don't have our own managers. We go out there and seek the best for our clients. I think we have the same approach of open architecture for the way we're building our technology stack. And we view this type of open architecture as something that's positive for people, positive for us. And I'll also, to be quite transparent, some of them we're going to work out, some of them won't. But in most cases, there's a really good learning process in there for us. And I think we've seen some younger fintechs or some new fintechs or even more matured one come in and twist the way we were thinking about problems. And it's not just about technology, it's also about how you solve stuff. I always think that the best innovation is trying to find a way to simplify things. And therefore, that's a problem that you'd love to have outside help to figure out, because you know what you know inside of an organization. So we've been really open about that open architecture concept for technology, and it serves us really well. And therefore, in this type of competition, we're really looking to see what we could get out of it, because some of our partners really did more than just adding technology to our stack. They added a new way of seeing things in terms of problem solving.
And do you think technology, fintechs, are the and only solution to solving the wealth problem? Probably not.
I'm sure two people would be happy if I say, oh, absolutely. So obviously, I'll say no to this, but they are a key component of it for the reasons I just mentioned. I think also, realistically, as things become more and more intertwined in terms of both sides of a client's balance sheet, his personal finance, behavioral coaching, you're seeing these historical walls falling down in terms of saying, well, that's asset management, that's my estate, that's my financial plan, and therefore I think from open banking to the way that technology is disrupting the typical old school view of seeing how wealth management is, I think they're going to be important. Now, I am the first one to say that technology alone, fintech normally needs a group of individuals who's able to cater to clients, to talk to clients, to be able to power their experience. And it could be through a bank or it could be through anybody else. But I always think that the group who's the closest to the client is going to be able to have the most data and interaction with them and learn, because it's a learning process. So you need clients to learn, and I think that's why we have a good relationship with a lot of fintechs. Is it's a learning experience for both groups, the bank as well as the fintech we're partnering with. So that's sort of our angle on this type of association.
I'll take the kind of fintech approach to that, and I'll say absolutely not. Fintech is not the only answer to being able to solve these problems. And I look at it a lot like incumbents are the cruise ships that are in the ocean, and they're moving at a steady pace, and they can weather a storm, right? And the speedboats are quick, fast, they can pivot on a thing, but a storm comes along, and not many of them are going to be able to weather what's happening.
That's quite the analogy. I was picturing it. You described it really well.
So for fintech to be able to go out and do this, I think the things that they're really good at are customer discovery, solving problems, taking on a level of risk that typically an incumbent wouldn't want to take on themselves, and they can prove and validate certain things on their own. But at the end of the day, you have to work through regulatory, you have to work through the piping and infrastructure that the banks are connected to. Most fintechs can't operate without banking rails, and in some way, shape, or form. So I would say fintech can't survive without banks or incumbents and the rails that are there, and that's why I think it's really important to have that strong relationship and be able to go and manage that.
And let's speak about that a bit, because, well, both of you work with banks a lot. How is that, like building a startup, for the people who are going to take part in the National Bank Innovation Competition, how is it collaborating with a bank?
So I don't know if I can talk about collaborating with a bank, but I can talk about collaborating with National Bank. It's very, very cool. I was not there at the time the partnership was being set up, so when I joined, it was very much in place. But what I like the most about it is the fact it doesn't feel like there was some, executive buy-in at the top and everyone was told, okay, this is our new partner, help them. Like the buy-in is throughout the organization. So we speak with people in all lines of business. We run tons of experimentations on a number of fronts. We run projects together, this competition being just one example of many. The bank is also obviously our lead investor now, so they're literally our lifeblood, funding everything we do. So when we're talking about the combination of fintech and incumbents, that's just really a very raw example of why the combined approach is the way to go. So it's very cool throughout.
I have to echo a lot of what Dom said. National's been a great partner. I'll take a more broad approach to working with banks in general, because I've talked to every Canadian major institution in Canada and a whole bunch in the US and Europe. I can tell you from what I've seen back in 2015, it was very difficult. There was a level of interest, but the regulatory landscape wasn't there. There was no such thing as a fintech sandbox. There are no really proven strong fintech models, especially on the consumer side of the business that have been around, which is funny because fintech is just financial technology has been around for forever, but the way that we define fintech today. Since 2015, I would say there's a level of appetite that has spread amongst all of the institutions. You have banks who are starting their own startups, and they are launching companies very quickly. You have multiple banks. We have 2 banks on our cap table that both invested in our platform, similar to Flinks, and are really both invested from a partnership, but also from an equity perspective, which is really cool to have someone that has skin in the game with you to be able to go and make it a reality. And one of the things that I think I have to fight for the consumer is remaining agnostic, right? And we love our partnership with National, and we're doing a lot of really great things together, which will allow us to co-create product and build the best solution for the user. At the end of the day, you have to remain agnostic, because if you go out and early on, I had a bunch of exclusivity deals offered to me to come in and, let's take your assets here, let's do this exclusively, let's white label and only use that. And I think fighting for the consumer at the end of the day is extremely important. And I can tell you that there's been a level of comfort amongst all institutions to coexist together in the fintech ecosystem. At the end of the day, they all want we all want the ecosystem to move in the same direction. And I think that's the most exciting thing for me is being able to remain agnostic, but still have these strategic partnerships to build a really cool product. And at the end of the day, if that's what you do, then that's a win in my books.
So now looking forward, so through this competition and just in the years to come, where do you think Canadians, entrepreneurs, should focus their attention in the wealth industry to be able, where are the most crucial problems that, not necessarily quick fixes, but the low-hanging fruit?
Yeah.
What are the problems people need to tackle?
I'll start with a little CGEP philosophy. That Maslow pyramid, you probably all forgot that, but the bottom part was security.
Yeah.
And I think for a lot of people igniting, and a lot of fintechs out there igniting that answer to this security need that everybody has, I want to be secured first. And
Do you refer to cybersecurity here?
Oh, no,
or
sorry about that. No, just security as a personal security. And,
Gotcha.
and I think if you go back to that philosophy course, that's the first thing people want to have. Obviously shelter, food, and you'll see really quickly that making sure you're able to provide for yourself and secure your lifestyle, your life, etc., goes really high in the pyramid of priorities for people. But then there's inertia. to get there. So I'm a little philosophical there, but in terms of how fintechs could help us there, well, it's thinking about everyday situation and going back to the nudges, going back to answering am I okay, which is a big deal for us because it's a simple question, but obviously there's multiple ways to answer it. So these are all key elements, and I think the most important thing people could do is, again, going back to making sure you have enough and not making sure you make necessarily bigger returns, because we're going to provide the returns, we're going to be there for that. But the biggest risk Canadian face is not having enough, and I think that's the biggest challenge. And also we tend to think about fintechs for either younger people who are going to be using instead of the banks, or sometimes people that don't necessarily have much assets. On the flip side of the equation, I think a lot of people in their 60s, 70s, the demographic, people are going to be aging a lot longer, and you're going to be retired maybe 20, 30, 40 years. And answering that question becomes really crucial at a certain part of your life because you might not be working anymore. So while we have that bias of thinking about the millennial, how we could get him motivated to put money aside, which is super important because we shouldn't live in our parents' house for until we're 50. But at the same time, if you go up the pyramid chain, and you realize that the life expectancy of people is getting much, much, much older. And especially if you're a couple today and you're 65, there's about 90% chance that one of them is still going to be there at 90. And they'll want to know if they're okay too. And technology could help that. And so these are the type of problems we're trying to solve. And I'm just encouraging people to be open on the demographics when they think about it. And also go back to that Maslow pyramid concept to say, well, could this help people answer that security need they have? And if you're able to do this, then obviously we're more than open to listen for it. And then I'll let my colleagues cover the data aggregation and all the technology around it. But these are the basics we're really looking for.
And also, maybe I can add is, as Jonathan mentioned, simplicity. So it's really important to make it simple. That's the way we will be able to make it available to everybody on the planet. So keep that in mind in the innovation competition. It has to be customer-centric. The human needs to feel it's pretty simple as we are using some product or services today. Let's keep that in mind. This is, for me, a key differentiator where there's a lot of value to bring in.
So to me, at the end of the day, the real problem that wealth management needs to tackle is exactly the statistic you've mentioned at the beginning, right? People have no savings, they've got no cushion. They're in a lot of people are in a situation of financial precarity,
and even a lot of debt. When we look at the lowest 20% of earners, they have debt racking up of like $20,000 annually.
Yeah,
more than that.
And so the effect of this is people are living paycheck to paycheck, and this is what needs to change, right? And so there's two things that can change this: a mix of education and getting the right financial habits in place. Now with wealth management type applications, like yours or like others, this is becoming easy for people. It's cheap. You can do it from your phone. The legal aspects are taken care of for you. Your application will know you can contribute, this much to your TFSA. Like, they simplify everything. So that piece, I'm confident we're on the right path to solve. But the trickier piece is education. And again, some fintechs are starting to tackle it. In some of these applications, they will give you capsules of like, hey, get rid of your high interest debt before you start trying to invest. Hey, even if you don't have like, thousands of dollars to put away and save right now, start early with whatever you have to leverage compound interest, So easy notions that people don't learn in school, but that everyone should know. So to me, this is the challenge, the education piece that, the wealth tech industry should focus on. The other piece of simplicity, I'm very confident we're headed in the right direction.
Great UX designers, UI designers.
From all the applications we power right now and what we see, like, to me, this is like, all right. And
I agree. I think education's one of that main piece. I personally, I got cut off the year before when there was that home economics class, which I think would have probably been very relevant, and I would have understood personal finance management much earlier. So that brings me back to the question I had before, where we're saying, like, is fintech the win-all solution to be able to solve this, or is it much broader than that, where it comes to like education from government level? Or
I think it is broader, and I think everything ties back to what Jonathan said about nudges. Education is one piece of it, but there have been studies, and Richard Thaler won a Nobel Prize for this idea about nudging. There have been studies who've proven that even though you know and you have been educated about the things that are right for you, there are inertia mechanisms that are unconsciously in place that stop you from doing the right thing, whether it's for health, for your personal happiness, or wealth. So we need to think in terms of, yes, this accompanying coach, these accompanying apps that nudge you towards doing the right thing in a very simple manner and get you to create the reflexes and get you engaged on a continuous basis with your savings and investment process. So I think that's an avenue that we need to look at.
Maybe just to touch on your last point on the Open Innovation Project and what you should be looking at. Mylo is in a unique position that we've built our company more around our social mission than we have around anything else. And so I'd bring it back to the definition of financial inclusion, right? So there's a largely underserved or underbanked population that continues to apparently be growing in the Canadian market. So if you take a look at financial inclusion, for me, the definition is how do you make products more affordable and more accessible. When you take a look at affordability, it's not necessarily, how much does this one actually cost? It's more about transparency in price and understanding exactly how you can make it easy to understand for a consumer to go in. So that way you're not going back to analysis paralysis, right? You're not going back to, I want to understand this. It sounds like a good idea, but how much is it really going to cost me at the end of the day? Mylo solves that problem by charging a $1 or $3 a month flat fee. So capped at $36 a year, you have a fully managed investment account, portfolio manager you can call anytime, technology that helps you, nudges you, and does all those things. So that's the affordability aspect, and I challenge you to think of it that way. The accessibility aspect is one that's building products in the way that people want to consume. So I love the idea of looking at different demographics and looking at the, fintech's not just for millennials, and then I love that we have people 80 years old on our platform.
What's your demographic look like? I'm so curious.
Youngest age, unfortunately, is 18. I'm working really hard. I'm lowering that even lower than 18 years old, but right now it's 18 is our youngest age, and then I think our oldest client's in his mid-80s, all done on a mobile device, so that's not a very inclusive atmosphere. So we're looking at how do you build more products, more channels in the way that people want to consume, but there's also how do you reduce the friction points, right? So rather than sending in a void check, you can take a picture of your ID that you have on you, right? You don't have to type in complicated information that you don't have, like account numbers. You can use a program like Flinks and just authenticate the way that you authenticate with other apps. We were one of the first in Canada to open up investment accounts without a phone call, remotely, not face-to-face, and we're doing fractionalized trading, so you can get started with $3 or $2 or $1.50 an investment account and have that be fully diversified with fractional shares. So think about how do you use technology in a way that people want to consume those products and remove those barriers, and I think you'll build a financially inclusive product.
Any final remarks before we wrap this up? Maybe I'd love to hear from you. Any advice you would share to the teams participating in the National Bank Innovation Competition?
Well, I think it's important to be creative. So not just look at what's being done on the planet, but think about solving a problem that no one has ever tried. This is one. We mentioned it before, make things simple. I think that's the best way to have a general audience and to show value. So definitely those would be my two advice for the competition.
It sounds cool to work with the National Bank. So if you're not already registered to the competition, we hope today's panel brought value to you, that you learned a bit more about the wealth industry in Canada. If you're already participating, well, hope you're going to have a lot of fun. It sounds like it's going to be a great competition. We're already more than 60 teams signed up, so it's going to be very interesting to see the projects that come out of it. Thank you all so much for your time today. Really appreciate you coming out and sharing your expertise and your perspective. And thank you all for joining us. Take care.
Folks.
Thank you.